Prices at the pump have remained low, but oil prices have been rising. What should investors and consumers expect in the near future? That's the big question. If you're like me, you feel good pulling up to the pump and seeing lower gas prices. But because of high taxes in the state of California, they're not as low as many places across the country. I guess gotta say, for us in California, paying around $4.20 a gallon for gas is a pretty good deal. Those of you not in California might be laughing at that, but that's the reality we face here. If you've been watching the price of oil lately, it has touched $80 a barrel, with blame going to new U.S. sanctions on Russian oil that could reduce the global supply. The good news for U.S. consumers is there is currently an oversupply of gas according to the Energy Information Administration, which is also known as the EIA. As they have said, inventories of gasoline are now 6 million barrels above normal existing inventories, with refiners producing more gasoline than drivers can use. The big culprit at the pump is about 50% comes from oil price changes, and then 20% of those changes in gas prices comes from refining costs. Since Russia invaded Ukraine, there have been sanctions that have caused oil prices to spike at various times, but Russia has been able to find ways around the sanctions, which would then increase the world supply of oil once again. We will see if that happens this time. Maybe it will be difficult with the new administration here. If oil prices do continue to rise, well, OPEC Plus could make some changes, as they did reduce output by 5 million barrels per day, which is over 5% of the global demand. Even if oil prices stay at these higher levels, perhaps we could see more supply come online from OPEC Plus, and there is talk that maybe by April they begin producing more oil again. I think that should hopefully put an upper limit essentially on the price of oil. If you're an investor in big oil companies or oil-related investments, I believe you could see some nice gains in 2025 for a few different reasons, but again, I'm still looking for a pretty good year in this year. For consumers though, I don't think we'll see the large inventory last long, and perhaps by early February, we could start seeing prices at the pump once again rise. There are a lot of actions the new administration is taking to help with energy policy, but I believe this will take some time to flow through the system. We've talked about our concern about oil prices here essentially in the short term, but long term I do think it will resolve itself. I'm Chase Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.